Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, we'll get you set for more corporate earnings in the tech sector. I'm Nathan Hager in Washington.
I'm Caroline Hepker in London, where we're asking how Middle Eastern and African countries are focused on business in a changing world order.
I'm Doug Krisner, looking at whether the Labubu Craze is due for a Beanie Baby-style bust.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. We begin today's program with more corporate earnings in tech. Cybersecurity provider Crowdstrike reports on Tuesday. Then we hear from software names Snowflake and Salesforce on Wednesday. For more, we're joined by the analysts who cover these companies most closely, Bloomberg Intelligence Global Head of Tech Research Mandeep Singh and Anurag Rana, tech analyst for Bloomberg Intelligence. It's great to have the both of you with us on this weekend program. Of course, we've heard from a lot of big tech names already. A lot of the hyperscalers have reported as well. Mandeep, I'll start with you. Do the results that we've heard so far tell us anything about what we could hear from these software players this week?
Yes, I think when you look at the hyperscale cloud numbers, especially Microsoft and Google, it's pretty clear that, we are seeing that lift from AI workloads for both Microsoft and Google. And that's why Microsoft is growing close to 40%. Google was mid 30%. And they're ramping up CapEx in anticipation of those numbers going even higher. So I expect that to trickle down to some of the software players. Like Snowflake, for example, is in the business of using enterprise data for deploying some of these agents that everyone is looking to add in terms of their enterprise functionality. And Snowflake data is, to my mind, critical. So they should see a similar lift to their top line from AI workloads. And Crowdstrike, being a cybersecurity provider, I think they are finding the attack surface when it comes to generative AI is far bigger than what anything these security companies have dealt with. And you could have prompt injection attacks and some other types of new attacks that no one even conceived of before. So they should similarly benefit from enterprises looking to secure their, firewalls and their infrastructure, given everyone is deploying AI. So I expect Crowdstrike print should be strong as well in terms of AI demand.
Let's bring you into the conversation, Anurag, as well. I know you cover Salesforce pretty closely as well. What do the hyperscale numbers tell you about what we could get from Salesforce?
So Salesforce is on the other side of the equation. They really, are in a completely different business than some of the other vendors that Mandeep talked about. In their case, the only product that has an overlap is some of the data cloud that they started to sell in the last couple of years as part of their Gen AI offering. Now, that product is a small portion of the overall portfolio. So even if it doubles, really, it's not going to really move the needle for them. For them, they're on the receiving side of the lower end of IT spending, which is as people are spending more and more money on AI-related workloads and AI-related infrastructure, it's taking out from some of the stuff that Salesforce is selling. And in fact, one of the things that they are grappling with is the lack of seat count growth in their enterprises that they sell into. So in our view, it's not going to be that exciting for them. They're running at about 10% bookings growth rate number. That's probably where we'll see for them. The big question for them would be, how much of the guidance they're going to go out and improve because of the closure of the Informatica deal, which just happened.
Let's dig into all these companies much more closely, Mandeep. I know you cover CrowdStrike in particular, and I got to admit, whenever I think of CrowdStrike, I think of outage from last
Yeah.
year, just because, full disclosure, it affected me personally. I think a lot of listeners can relate to that as well. Is that still an overhang, or is it fair to still think about the outage when it comes to CrowdStrike?
Well, so when I look at the new customers that CrowdStrike has added since then, clearly their pace of new customer adds have slowed because of what happened. And I feel they've come out of it relatively okay, even though there was a slowdown, but they managed to hold on to their existing customer base. And now we are at a point where, because of generative AI deployments, I mean, there are 3 or 4 companies that probably are best positioned to benefit from, the Gen AI deployment. So I would put CrowdStrike amongst one of them. And clearly, there is M&A going on with Palo Alto buying a Chronosphere and CyberArk and Google buying Wiz. So there are other dynamics at play, but on an organic basis, I think CrowdStrike has done well, and they have themselves made some tuck-ins. So I feel they have been able to at least stabilize, the impact, and second half for them would be faster growth compared to the first half of 2025. And so from that perspective, I mean, given they're around 20% growth, I expect growth to improve going forward.
It's interesting to think about the opportunities presented by artificial intelligence for the cybersecurity space. When it comes to CrowdStrike, are there challenges?
So CrowdStrike, to me, is still a company that is a category leader in the endpoint security space. And so the challenge is, if everyone starts deploying security in a different way, so imagine, we have a lot more agentic functionality out there. You don't need to secure as many human users. And so that could have an impact on CrowdStrike going forward. And they clearly have to adapt to their business model in terms of the agentic functionality. But as I said, I don't see any pure play AI security provider really challenging their position right now.
And when it comes to artificial intelligence opportunities, Anurag, looking at Salesforce's upcoming earnings, we just heard from the CEO ahead of the report saying he's not going back to ChatGPT after seeing what Google's Gemini offers now. There's been a lot of attention on this new large language model coming from the Alphabet unit. Where does that position Salesforce heading into earnings?
Yeah, I think the Google CEO must thank him for a few billion in market cap addition over there, because
Right.
that was a very big statement. Google works very closely with Salesforce. They provide cloud services to Salesforce, so it is a very good relationship between the two firms. And also remember that OpenAI is starting to get into the wheelhouse of a lot of these software providers by saying that you can run some of the software-like functionalities through ChatGPT. So there could be a little bit of that. But frankly speaking, when it comes to Salesforce, the fundamentals are that non-AI related IT spending is weak, and it has been weak for some time in the last couple of years, as corporations are spending more on expanding their AI footprint, or either in infrastructure or models. They are pulling back in areas such as traditional software spending, where Salesforce lies, or in consulting, which is impacting some of the consulting names. So that's the theme that we are seeing right now. Let's see if that reverses in 2026. But as of now, things I would say from a macro point of view are not that rosy for Salesforce.
Interesting. Why is that? Is it just because there's too much of a reliance on artificial intelligence right now?
No, it's not that. If you are a JP Morgan or a Citibank, you have to make sure that you invest aggressively in AI-related aspects of it. Now, and these companies also don't have unlimited budget. So if your overall budget is only going to grow up by 7, 8% or 9%, and you are allocating a large portion of that into AI, you have to find money from somewhere else, and that somewhere else is usually tapering down in some of the other areas, whether it's buying new hardware or cutting your consulting spends, etc. And that's what's impacting Salesforce.
And Mandeep, looking at Snowflake's earnings the same day as Salesforce on Wednesday, it looks like there's a lot of focus on how they're navigating artificial intelligence as well.
Yeah, I mean, look, when I compare Snowflake to a company like Palantir has seen, remarkable acceleration on the commercial side, by integrating their ontology product with these LLMs. And to me, the closest competitor for Snowflake is Palantir and Databricks. So from that perspective, Snowflake hasn't seen that kind of a bump that Palantir has seen. That's partly to do with they didn't have as many LLMs on their platform, to integrate with for agentic functionality. They've been trying to add more LLMs, and that, for me, is a catalyst for that top line acceleration. But there is no doubt that they are behind when it comes to some of the agentic functionality compared to Databricks and Palantir.
And when it comes to bringing in more of those large language models, does that add to some of its costs, and could that have an effect on its margins?
It certainly could, and that's our view as well, that Snowflake may see some pressure on margins. And look, they use all these hyperscalers, Microsoft, Google, and Amazon, for deploying their products. So if Microsoft or Google have to raise prices, then they're going to pass it on to Snowflake. So from that perspective, we do think with more AI workloads, a company like Snowflake may see pressure on the margins.
And of course, all these earnings are coming at a time where investors broadly are questioning artificial intelligence valuations. Anurag, how does that play into what we could get this week?
Yeah, when you look at valuations, right, Salesforce, as I said, is the completely opposite realm of all the AI infrastructure play that's out there. Their valuation is a lot less with what has been historically. In fact, SaaS vendors have seen a decline in the last 12 to 24 months because of the seat count pressure that we talked about. And even for them, when you look at margins, you're not going to get the same lift in margins that we have seen in the last 2 to 3 years. Salesforce, under the attack of some activist investor, really went out and gave margin back to the investors. But I think right now, with their Agentforce product, they really are investing heavily into sales and marketing. And I think a lot of that will show up in this quarter's earnings.
Well, again, we hear from Crowdstrike on Tuesday, and then Snowflake and Salesforce on Wednesday. Thanks to both of you for being with us. That's Mandeep Singh and Anurag Rana of Bloomberg Intelligence. And coming up on Bloomberg Daybreak Weekend, we'll look at how Middle Eastern and African countries are focused on business in a changing world order. I'm Nathan Hager, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in the program, we'll look ahead to the holiday shopping season as those trendy Labubu dolls are expected to be a hot item in Asia. But first, in the coming days, industry leaders, investors, and government officials descend on the UAE for the 7th Milken Institute Middle East and Africa Summit. This year's edition is taking place at a time when shifting geopolitical landscapes and technological advances are dramatically altering the world order. Attendees will seek to understand where the Middle East and Africa fit in the new hierarchy. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Nathan, the Middle East and Africa have the advantage of young demographics and strategic location. They could well be poised to take advantage of the next frontier in global development. This year already, Middle Eastern states, including Qatar, have played a pivotal role in the signing of the Gaza peace plan, with President Donald Trump thanking Arab and Muslim nations in advance for pledging money to rebuild the devastated Palestinian territory. Questions do remain over the extent to which these nations in the region, including Saudi Arabia and the UAE, will help fund the reconstruction. While several deep-pocketed and energy-rich countries in the area worked on and enthusiastically endorsed the peace plan, almost all have specific reservations. Meanwhile, countries in Africa are grappling with a complex relationship with the US president. Bloomberg opinion columnist Andreas Kluth has written about how Donald Trump's claims that South Africa is facing government-sponsored race-based discrimination and that in Nigeria, quote, they're killing Christians, are evidence of the current administration's use of African policy to promote an America First agenda. The position of African countries, therefore, in a world increasingly dominated by US rhetoric, does face challenges. And it's something that was discussed widely at the recent Bloomberg Africa Business Summit. During the event, South Africa's Minister of Finance, Enoch Godongwana, told Bloomberg's Jennifer Zabasajja that talks between the United States and South Africa are ongoing.
There are negotiations taking place between ourselves and the USA, except that we can't be through the media showing what details of this agreement when we're not negotiating with them in the media.
What would you say the current state of relations are between South Africa and the U.S.?
Absolutely no problem, except that now and again we hear what the USA says about genocide and all of those things.
Do you think it is putting a dent on potential investment into the country?
Yes, the USA is powerful, and to that extent it influences the attitude of investor community towards South Africa.
That was South Africa's Enoch Godongwana speaking there to Bloomberg's Jennifer Zabasajja on the sidelines of the Bloomberg Africa Business Summit. This ahead of the Milken Institute Middle East and Africa Summit in the coming days. So I've been getting some information about what is to come from Bloomberg's UK and Middle East finance editor Jenny Serrain and our chief Africa correspondent Jennifer Zabasajja. Welcome to both of you. Thank you for speaking to me. In terms of the Milken Institute, this particular event, Jenny, give us a sense of how big a deal the gathering is, who the main players are going to be attending, because there is increasingly a focus on the Middle East and its connections around the world.
What we've seen increasingly is, especially as the U.S., maybe has pulled back in a lot of ways from some of these big global summit type things, you've seen a real big emphasis on some of these Mideast players that can kind of step in and fill the void. So this is a region that just has vast amounts of capital. You've got entities and specific investors that are looking to put that capital to work in new and interesting ways. And so that's why you see so many Wall Street names and sovereign names from around the world kind of flocking to these events and looking to get in touch with these investors.
How do you think those Middle Eastern countries, the GCC, are balancing the desire for investment and also their domestic issues?
Yeah, it's interesting. I do think we're starting to see more of a divergence between the different countries themselves. So over the years, Abu Dhabi's reliance on oil, it has lessened to some degree. And a large part of that is because they've been able to go and invest so heavily in these new and different areas. Saudi, on the other hand, is still heavily reliant on oil. And so you kind of see that in how their different budget dynamics play out. But you see, I think, across the board, a desire to move beyond oil. That's why you see them rushing to invest in all of these new economy, up and coming area.
Jennifer, you've just come through a very busy time in the past few days in Africa, talking to a lot of African leaders. We heard a little snippet of one finance minister who you spoke to. Just tell us firstly of some of the complexities that are facing African nations, of which there are so many right now, as this sort of new world order is establishing itself.
It was the first Group of 20 summit, of course, that was on the African continent, that was held on the African continent, which was significant for many countries outside of just South Africa, which is really the only sovereign nation that's a part of the G20, but also the African Union was also a part of the Group of 20. And so we saw a number of leaders that use this opportunity, and even South African President Cyril Ramaphosa, who has held the G20 presidency for the past year, used this, opportunity to amplify a lot of the challenges that these countries are facing that even predate a lot of the shifting alliances, if it were, that we've seen in the past few months. And so, of course, one of the major, and probably one of the top concerns that many of them have told us is this issue of debt sustainability. This is, of course, really came to light even more so after the pandemic, when we saw a number of African countries actually, fall into debt, and they were not able to pay back some of the debt that they had borrowed. We saw that from Zambia. We've also seen that from Ethiopia. And so the concern really was, how do these African countries develop and industrialize when most of the revenues and the payments and their cash flow that they have domestically is going to servicing debt, more so than many of our reports indicate, more so than sectors like education and health. And so we heard from a number of ministers wanting to at least find some ways in which they are able to maybe look at various ways of financing. And so it's not just getting services from the IMF or the World Bank, but it's also from new investors.
Jen, where do you think the focus is then? What do you think that African nations are thinking about in terms of their ties to the Middle East? As you say, there's a lot of focus on the Trump administration and the US relationship with these countries. What are those ties between African countries and the Middle East?
What's been interesting is that, the Trump administration and the U.S. sort of scaling back in their aid, going from aid to trade or transactions to a certain extent, has sort of come at the same time in which a number of African countries have been able to stabilize many of their economies, so much so that they're some of the fastest growing economies in the world. And so while, of course, the shock of U.S. aid was very relevant and a focus for a number of countries, it's also come when there's a lot of new investors that are looking for capital to deploy. And, we were actually speaking to the Barclays head of South Africa, and he's also head of the private banking across the continent. And he was just saying just how much capital there is in some of these Gulf nations, and how, the extent of the money and where it's coming from, and the opportunities are more so than he's seen in the past few years.
Okay, so that's an interesting point. Jenny, I'm also thinking, maybe some of this turns on the military, but also a lot of it turns on soft power as well. How does soft power, not just hard power, play into the mindset of the Middle East now? A huge investment in lots of other things to project, whatever image it is that those leaders want to, maybe in sports or in other ventures. How do you think about soft power now in the Middle East?
I think it's definitely still top of mind for these governments. And so that's why you see a lot of the different entities, whether it's sovereign wealth funds or other alternative asset managers that they've set up, going after these kind of more unique assets that are on the market. I think you saw it with the PIF's decision to, go and take Electronic Arts private and kind of the big take private deal of the year. That was a huge display of the kind of wealth and then the kind of ambitions that they have. And that was all tied to, their desire to be the leader of the gaming industry and have this huge, footprint in a space that's obviously fast growing, but also kind of captures the minds and imaginations of a lot of consumers around the world. And so I think, we'll definitely continue to see these players, look for ways that they can make that kind of mark and kind of these key industries. And I think sports is a great one, as you mentioned. You see them doing it in arts and culture increasingly. So it'll be really interesting to watch as they kind of pick their spots and pick their moments to deploy this trillions and trillions of dollars of sovereign wealth that they have.
My thanks to Bloomberg's UK and Middle East finance editor, Jenny Serrain, and to our chief Africa correspondent, Jennifer Zabasadja. I'm Caroline Hepker here in London, and you can catch us every weekday morning for Bloomberg Daybreak Europe, beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, we'll look at whether the Labubu craze is due for a Beanie Baby style bust. I'm Nathan Hager, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. As the holiday shopping season gets underway, those trendy Labubu dolls are expected to be a hot item. The toys are produced and sold exclusively by the China-based retailer Pop Mart. But some are wondering if these toys have reached their peak and whether Labubu is due for a Beanie Baby style bust. For more, let's go to Daybreak Asia podcast host Doug Krisner.
Nathan, these dolls have become a global phenomenon. They're fictional characters, and they appear to be an interesting mix of cute and creepy. If you haven't seen a Labubu doll, it might be helpful to think of it as a fuzzy, elf-like figure with a row of jagged teeth. Images of these dolls reminded me of the characters from Where the Wild Things Are, created by Maurice Sendak. Labubu isn't a standalone character. I was surprised to make that discovery. She is part of a larger group called The Monsters, created by Hong Kong artist and author Kae-Sing Leung. For a closer look at the popularity of Labubu and what it means for the company that controls this property, I'm joined by Bloomberg's Shirley Zhao. Shirley covers consumer companies in Asia, and she joins us from Hong Kong. Thank you for making time to chat with me. So we know now Labubu has gone global. Can you help me understand the beginning of this craze? How did things start?
So things really started around late last year when it started to, caught a lot of people's attention. And the global craze really started to rise after a series of K-pop stars and Hollywood stars started to feature Labubu in their photos. And the most known, perhaps, is Blackpink's Lisa. And she is known as a huge fan of Labubu, and she is seen in many photos, showing her personalized Labubu with really trendy clothing and really fancy handbags. And, a lot of well-off people started to show Labubu in their, social media. That really triggered this global frenzy starting from earlier this year.
Can we say that it began in China on the mainland? Is that accurate?
Yes, it is accurate. I think a lot of this trend is to do with the economic slowdown in China. So previously, consumers in China were seen posting photos on social media, flaunting, Hermes handbags or, Louis Vuitton handbags and other really pricey luxury goods. But now with consumers' confidence starting to weaken, but still people want a taste of this luxury lifestyle of, the lifestyle of really well-off people. But they're being more cautious in buying luxury goods now. So what else can they do? And they see people like Lisa and people like a lot of rich people all showing their Labubu dolls. And then they want to buy the doll because that gives them a taste, like what they call a small luxury, a taste of the upper class lifestyle in the background of an economic slowdown.
Are these expensive? How are they priced?
They are relatively pricey in terms of, just a little fluffy doll. For small dolls like this, it's quite easy to fake it. So you can find a lot of different versions of fake Labubus on China's e-commerce platforms, going for much cheaper than the real ones. And sometimes you can't tell whether it's real or it's fake. The fake ones are known as Lafufus. So a lot of people are joking that even though they spend a lot of money and effort to buy a Labubu doll that they want, they don't know whether it's real Labubu or Lafufu.
So the doll is made by a company called Pop Mart. What do we know about Pop Mart?
So Pop Mart is known as making the so-called blind box dolls. They actually have started quite a few years ago, before the global popularity of Labubu. A lot of other Pop Mart's products are also relatively well known, although none of them is as viral as Labubu. So the other Pop Mart toys include Sculpt Panda, Molly, Twinkle Twinkle, and even Labubu's boyfriend, Tai Coco.
Shirley, can you help me understand the history of blind box gift giving? How did it start?
I think it really started in recent years, and it's actually no different from other forms of blind box toys like gacha machines that has been going on in Japan for many, many years. I think it's the sense of, excitement that you don't know what you'll get. And especially if you have a line of products, for example, there is a series of Labubus, and every Labubu features a different outfit or a different theme, and you want to collect every one of them. And you have to spend a lot of money, because sometimes, you may end up getting the same one over and over and over. And that's what get consumers into spending to get what they want, to get the toy that they want, or to collect the whole series of the toys.
So in terms of Pop Mart, it's a publicly traded company, right? That trades in Hong Kong,
Yes.
Is that correct? And how well has the
Yes.
stock been performing?
Well, the stock actually surged more than 1,500% from the start of last year to August. So the prices peaked in August, and a lot of that was riding on the global popularity of Labubu. But then it dropped more than 30% since August, and that highlights a lot of questions and concerns in the market about whether this Labubu frenzy can last.
I would imagine that, calling into question the sustainability of a fad like this makes good sense. But I think we would be remiss if we didn't acknowledge the fact that the holiday shopping season is coming up in the West. Obviously,
Yes.
we have the Christmas holiday, and then New Year will be here before you know it for parts of Asia that celebrate the New Year holiday, not the Chinese New Year necessarily, but just the beginning of the calendar year. Is the expectation here that we see a lot of sales moving into the holiday season?
We are definitely expecting a surge into the holiday season, but as I mentioned just now, there is also a rise of fake Labubus. So a lot of people have already been complaining about these fakes, and actually different countries, especially China, has been tightening their scrutiny against the fakes of Labubus. So it remains to be seen whether the holiday season can really trigger a surge.
Would you consider giving it as a gift still?
I would still, because I know, a lot of my friends are still quite into Labubu. And I think it's this sense of scarcity and the secondary market price that's still there. So that's still making people think, oh, they want this doll, because it's often out of stock in stores. For consumers like me, if I see, even if I'm willing to pay, but then, after a long time of waiting or after a lot of effort, and I finally get a Labubu, but still, I see a lot of fake Labubus that's much cheaper, much easier to get. For me, it's, I tend to think that it may be a waste of effort and time. But for a lot of other consumers, they still think the sense of scarcity makes it such a rare thing that they still want.
When you look at the market, Shirley, is there a specific demographic that we should address here? Are they primarily younger people? Are they teenagers? Are they a little older? Certainly. And I'm wondering about whether there is an adult audience for this product.
I think there is definitely an adult audience. A lot of them are in their mid-30s, but I think it's worth noticing that a lot of them are parents. So that means it's their children who got into it first, but then they started to get into it as well. I remember last year I was chatting with somebody who started looking at Pop Mart and Labubu, and I asked them, why do you think that this toy or the company will be successful? And they said that they went to China and they went to a shopping mall, and the majority of the shopping mall was very empty because, in China, the e-commerce platforms are ubiquitous, and that's really affected the performance of a lot of shopping malls in the country. But the only place where there were a lot of people gathering, especially, young people, like primary school students, is Pop Mart stores. And that's where, people are gathering and they are spending money to try to get their blind box toys. And that was when this person started to think that, this may become a trend. But again, how long this trend may last, it remains to be seen.
So the Hollywood Reporter recently reported that Sony Pictures has a deal now to the rights from Pop Mart International. This is the company that has the rights to the doll, about creating a motion picture. And to the point that you were raising earlier about the analyst community being a little suspicious or at least questioning whether this mania can continue, that seems to say to me that the idea of putting a film together based on this phenomenon, it may not last. And that is inherent in that is maybe a little bit of risk.
There are indeed questions about whether this film is going to be a hit or not. We don't know a lot of details about the film. Like, we don't even know whether this film will be animated or if it will be live action. The observation is that it appears that this deal came first. And then, Sony will probably figure out all those details later. But we have seen in the past examples of similar films developed from popular toy lines that turn out to be failures. For example, there are Bratz, the movie, Masters of the Universe, Pound Puppies and the Legend of Big Paw, and they're all based on really popular toy lines, but they weren't developed until several years down the line, and some of them barely recovered their budget, while others didn't really sell enough tickets to cover the cost.
Shirley, we'll leave it there. Thank you so very much. That is Bloomberg Shirley Zhao. Shirley covers consumer companies for us in Asia from Hong Kong. I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and all the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.